good, everybody? This is Obadiah. Today we're going to talk about top-down analysis. Yeah, it's actually been a while I've posted here on YouTube. I have some issues that I have to sort out before I come and do a video for you guys. Right, so today we're going to talk about top-down analysis. Top-down analysis is very easy, right? And it can be easy, it can be complicated because if you don't know the do's and the don'ts, right, if you don't know the do's and the don'ts of what you need to do in the charts while doing a top-down analysis, you're going to be losing a lot of money. Right, so in today's topic, we are going to talk more about the market direction, the supply and demand zone, the liquidity zone, and how to spot trading opportunities. So the next chapter, we are going to talk more about the higher time frame before we go back to the lower time frame and make our execution. So in top-down analysis, we have three different time frames. We have the higher time frame, the medium time frame, and we have the lower time frame. Right, three time frames: the higher, the medium, and the lower. Right, so on the higher time frame, we can choose the weekly and daily to be our higher time frame. We can choose the 4 hour and the 1 hour to be our medium time frame, and we can choose 15 minutes and 5 minutes to be our lower time frame. Yeah, but the higher the time frame, the stronger the zone, right? The higher the time frame, the stronger the zone we are trying to map out. So what are the uses of top-down analysis? The first thing is overcoming directional confusion, right? With top-down analysis, we can overcome directional confusion in the aspect that, as you can see right here, you can see the market is trending downward and later it changes structure and start moving upward. Like if you are on a lower time frame, you won't see a clear direction of where the market will be going over time. So it's only on the higher time frame you can see the direction of the market over time, not currently but over time, right? So we don't want to be caught up on the wrong side of the market. And the second important thing about our top analysis is to increase our accuracy, right? It's to increase our accuracy. Once you go from the higher time frame, and what you are seeing on the higher time frame is also what is happening on the medium time frame, and also what is happening on the lower time frame, you can have a little kind of confidence in your trade, and the accuracy is going to be top notch, right? So in the next chapter, we are going to talk more about analyzing from the weekly down to the daily, down to the 4 hour, and down to the 1 hour, and executing on the 15 minutes. And if that sounds good to you, kindly do well to click on the subscribe button and like this post. And if you have any question you want to ask, you can drop it in the comment section below. I'll be there waiting for your questions. Alright, with that being said, let's get into the video. So what is top-down analysis? Top-down analysis is a technique that combines the analysis of multiple time frame and market factors to gain a comprehensive understanding of the market condition. I'll say that again. Top-down analysis is a technique that combines the analysis of multiple time frames and market factors to gain a comprehensive understanding of the market conditions. So now with top-down analysis being explained, let me now show you how to analyze using the top-down analysis. So the first thing to do is to go to your weekly time frame. For some traders, they go to the 1 hour time frame, right? They go to the weekly, monthly, 1 month time frame. But I don't think, well, it's actually a good way of an analysis. But each candle you see here takes 1 month to be created, and I'm not sure that is a good thing for me. But I do with my weekly time frame. As you can see, on the weekly time frame, the market was on a bearish run for some while. And now I think the market is changing structure. The market fails to continue downward and is trying to move upward. So the first thing you need to do is to know your direction of the weekly time frame. If it's a bullish or a bearish or is ranging, but you can hardly see market ranging on the weekly time frame because it's going to take a very long period of time for a market to be ranging. It's going to, on the weekly time frame, it's going to take at least 8 weeks of candle just manipulation, and that is very bad in the forex market, right? So the first thing to notice is to check our direction on the weekly time frame. Okay, what we can see is the market trying to change structure to the upside. Let's go to our daily time frame. You can see the same thing on the weekly time frame. This is what's happening on the weekly time frame. Let's map out our daily. As you can see, market fails to break and close below this, and instead you grab the liquidity and change direction and start moving upward. As you all can see, now the same thing is kind of happening on the daily time frame. Market fails to grab the liquidity, fails to break and close above this, but we can regard this as an internal structure and wait. If the market breaks and close above this, we'll count it as a trend continuation, but if it breaks and close below this, we count it as a reversal, right? So actually at the moment the daily time frame is bullish and we are waiting for a confirmation with a with a candle breaking either to the upside or to the downside, right? So what we're going to do now is create our key level. Key level is very important in the forex market. Key level is very important in the forex market, and all I can see is this where our key level is, right? Because markets are actually rejecting off this zone multiple times. As you can see, at the current situation of the price, market is rejecting at this spot multiple times, 1, 2, 3, and then we should move to the left. As you can see, reject, right? Markets reject on this zone multiple times, which is a very strong confirmation that market is respecting this price, which is our 1.30113, and we have to take note of that, right? So as I said, we have to wait for a confirmation. Either the market breaks and closes above this, the color blue, or the market breaks and closes below this. So if the market does any of this, we are going to know the current direction of the market. As of now, the market is kind of giving a uptrend kind of movement, but market can decide to come like this, to come below this, grab the liquidity down here and continue downward. But the market can continue upward. We are not the market, so we have to wait for the market to do its thing so we can enter and make our money, right? So what we are going to do now is we are going to wait for the market. Now on the 4 hour, on the day time frame, you kind of see bullish. On the 4 hour also, you go down to the 4 hour, and you can see the same thing right here. Market was on the downtrend for a while, changed character and up, and now it's so on the daily time frame. What we do is we map this out. See that the market comes up here and break and close above this previous high, or it comes here to grab the liquidity and continue downward. Now the second thing to do, the first thing is to do what is to mark out your key level and draw the support and resistance, right? So these are the support and resistance, these three rejection right here. These are the support and this is support. Why I say this is support? Because market fails to break this zone. It has been tested multiple times, and this is the resistance. If the market breaks and closes above this, we will be going for a buy position, but if the market breaks and closes below this, we'll be going for a downtrend. So let's say, for example, the market decides to come down. What are the potential price markets can hit? As we can see here, we have the red candle and the green candle, which kind of validate a little order block, though it is not valid at the moment. but we can map it out. This is an invalid order block, right? But markets will reject it. It might not reject off this zone and change direction, but it will surely come to this zone. And we have the valid order block, which is down here. And we have another order block right here. So we have two zones where market might likely retest. Though it might take time because this is on a daily time frame, it might take a lot of time, but definitely the market is going to reject off this zone. So this is the wall. This is the daily. The daily is usually paint the daily blue, and the key level as orange, and on the lower time frame I paint them yellow. So what we do is we've mapped out what markets might do if it does any of this. But if we should break up to the upside, what we know is alright, the market is going to come and grab this liquidity up here, right? Going to grab this liquidity up here, but the market has the potential of coming downward because of this reason. Alright guys, so with our explanation being made, I want us to break the analysis down. First thing to do on your daily time frame is to mark out your key level. Key level is a zone that market has tested multiple times, and this is a zone right there. Tested multiple times. Right? So this is on the daily time frame. And as you can see, on the daily time frame, market now is creating a lower high and a lower low, right? Right here. In this box right here, we have the downtrend, and right here was the uptrend. Market was coming up here and down. Market is trying to retrace downward. So the first thing to do is map out your key level on the time frame to kind of have a clearer view of the chart. What the chart is doing, is it in an uptrend or is it going downward, right? So right here was a pullback. Then market fails to break this level here to grab this liquidity and move to the upside. So market intends to stop at this zone. Didn't break below this, and creating a key level for it. So this zone has been respected multiple times. So the first thing to do is mark out your key level on the daily time frame. That's the first thing to do. Then you go to the 4 hours to have a clearer view of the chart direction. Right, which is right there. Market was on a downtrend and changing structure to the upside. Right, so what we're gonna do now is we're gonna map out the possible zone that the market might retest, and that can be done on the daily time frame, which is right here. We have an order block right here, and we have another fair value gap right here, which is below here, the green, and the green candle. Right, so market has a great potential of coming to this zone. Then we'll go down to the 4 hour time frame. Right, so to enter our trade right here, we see a fair value gap on this zone. We have a red candle and a green candle. So market has a great potential of coming to this zone. On the 4 hour, it has a great potential of coming to this zone. So on the 4 hour time frame, you can locate an order block, which is this red candle, the green candle followed by a green candle, which haven't been mitigated. Then we can draw this out on the 4 hour time frame, right? So the first thing is to what? Map out key level on your daily time frame and look at the direction. 4 hour to map out your order block, right? Your order block, and now go down to the 1 hour time frame to have a clearer view of the chart, which is this right here. So at the moment, market is giving a signal that it might continue downward. And what is the reason? Because this pullback, this is a value pullback. I will be creating another video on how to locate a value pullback. This is a value pullback because the red candle was engulfed by the green candle, right? It was engulfed by the green candle. So this is a little pullback to the upside. Then what is the market doing? Now the market broke below this. So this is a change of character on the 1 hour time frame. So let's go to the 15-minute time frame to have a clearer view of it. And this is the clearer view of it. Right? This is the clearer view of it. Market was going up. Market was going up. I have a little pullback here. Then I did what? It comes to this zone right here. Which was what? Which breaks and close above this. Which is a what? A valid pullback in the market. I hope you guys understand. On the 4 hour, we map out the order block, which is right here and right here. We can map these two out. But this one is very, very close, so we won't need this one. We can go for this, right? And we boil down to the 1 hour time frame. We see that this is a valid pullback, which market breaks and close below. Right, so market breaks and close below the pullback, which now validates what? A change of character, a market structure shift. So market fails to continue upward, and market is trying to move downward. So what are we going to do? Our confirmation has been cleared. Market breaks and close below this pullback. Now we can enter a set position right here. I'm going to put our stop loss above this, above the previous high. In case market wants to pull back and continue down, we can take our profit, take profit down to this zone right there, right on 1 hour time frame. So this is a 4 ratio 1. That means we'll be making 4 times of the money we risk. So what can we do now? We just have to play the market to see what the market has to offer. So we boil down to the 15-minute time frame. We look at it and we see that there is a market structure shift. That means the market fails to continue upward and break and close below this. So right here is the a market structure shift. My message or a change of character. Change of character right there, right? So we have a market structure shift or a change of character right there, which stands for which shows that the sellers are now kicking in the market, that the buyers are already losing their power and their ability to move the market upward. So we have to enter the trade immediately after the change of character has been found. Then we can go down to the 5 hours to see have a clear confirmation. You see that it still does the same thing on the 5 minutes and on the 15 minutes, which has a high potential of what coming down. So if you have to put out and if you have to look for another take profit, our take profit can be here right here because of this other block on the 15-minute time frame. So we'll have our take profit 1, TP1 will be right there. We can also have our TP2 right here. This value gap that hasn't been mitigated. So we'll be looking for a zone that hasn't been mitigated. TP2, right? And we have this won't be valid. Then this will be our TP3 right here. We can go for this as our TP3. This last one here will be our TP3. Right, so with that being said, let's play the market and see what the market has to offer. So let's see. Market have a little pullback and Our first take profit has been what? Has been smashed right there. Our second take profit also what? Has been smashed. So this is a very nice trade just by understanding top down analysis. Then there we go. Our third take profit has also what? Has also been smashed. So if we are to risk $100 on this trade, we'll be making. If we are to risk $100 on this trade, we'll be making $400 as our profit. I will be making $400 as our take profit. This is an easy trade just by understanding top down analysis. And if you go to the daily time frame, you will see that the market does what we expect it to do. And why our take profit was here was because of the key level. The key level. We always make sure the key level is a very, very strong zone in the forex market. Now the 4 hour we have our order block, which is right here. And it was very, very clear on the 1 hour time frame. So that is very, 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 that is a very, very sweet trade. Alright, so now that we've written our first take profit, the second one, the second thing we're going to observe now is on the daily time frame, what zone haven't been mitigated? This zone hasn't been mitigated. This zone here haven't been mitigated. And as a day trader, our job is to just look at where the market is going to go for a long period of time. So if we say that every candle here takes a day, I mean for the next 18 days or 15 days or 16 days, or anyhow the market wants to move, but at least a 7 days in a as for good 7 days, market is going to be coming downward because of this zone right here. So we won't be looking for any opportunity for a buy. We won't be looking for any opportunity to go for a buy. We will only be looking for a sell opportunity, which we are going to be locating on the 4 hour time frame, which is right here. So now that we've seen that the market has come to our key level, we are also going to wait for a confirmation for the market to break below this value pullback also, just like we did on the 1 hour time frame. Right? So I'm going to draw a zone right here and wait for the break of this on the 4 hour time frame. Market grab the liquidity and market is trying to fill the fair value gap that is right here. Right, so these are fair value gaps right here. So once we've noticed our fair value gap, we can also go for a long opportunity. But like I said, we are not going to look for opportunity to go for a buy. We will only be looking for a sell opportunity. So the market is going to go to the fair value gap. Alright, the market is already in our fair value gap already. So this will be a perfect entry for a sell, because the market has already mitigated our fair value gap. So the best thing is to wait for a confirmation, which will be change of character. So let's put the market down, and this does it. We have a change of character right here. Market was going upward, and we have a break of structure right there. So I'm going to wait for a pullback also, because we don't want to just enter. Now we have another fair value gap, which is right here. Once the price enters this fair value gap, we are going to go for a sell. Alright, let's see. Now the market has filled has break structure right there, so we can go for a sell at the moment. We can go for a sell, but if we have to go for a sell, it's going to be a very high risk because this fair value gap here hasn't been mitigated, so it was left there. Probably if the market wants to reverse, it can come to this zone. So the fair value gap has been created. What we have to do in this forex market, we have to be very, very patient, right? We have to be very, very patient. So what we're going to do is we are going to wait for the market to reverse back to this fair value gap right here. Then we can go for a sell position. Whether it's going to take us 3 days or 4 days or 5 days, all we want to do is we have to wait. Patience is the key in the forex market. Now, so let us play the market. The market is pulling back for a downtrend. Now you see, it has been, as of this moment, this fair value gap is invalid because it has break and close above it. So the market is hunting for another fair value gap that is right there. So they are above all this fair value gap. Market will have to mitigate every one of them, then continue downward. But sometimes the market just feel like, you know, deceiving traders thinking that this zone is invalid and it's going to continue upward by retesting back to this zone and going up. So what we are going to do, we are going to wait for the market. Now that I've said that this zone has been mitigated, we can erase this and see what the market has to offer again. Now, this is a valid pullback. If the market breaks and closes below this zone, we are going to go for a sell. So let's go down to the 15 minutes and see what the market has to do. Now that's it. The market breaks and closes below this, which makes us which gives us a confirmation that the market is going to continue downward. Now we can enter our trade now and put our stop loss above the previous high. Then we boil down to the 1 hour time frame and look for a potential zone that the market might hit a 3:1, which is right there. Right, so, and we go into the 4 hours to confirm some certain things. And right, there's a liquidity right here which needs to be grabbed. There's a liquidity right here which needs to be grabbed, so we can put our take profits right there. It gives us a 3:1 risk reward ratio. And with that being said, let's play the market. And why I said this is a valid confirmation, the market creates a double top. Double top stands for a very, very high chance of double top is mostly done when the market wants to reverse. Double top, double bottom. So if the market creates a double bottom, that means it's going up, and if the market creates a double top, that means it's going what? It's going down. So this is a double. This is a what? This is a double top. Right there. This is a double top right there. So we can be very, very assured that the market is going to come in because it has broken the neckline, which is this. Then we can place our stop loss above this place. I'll take profit on the liquidity zone, which is right here, right? And this is going to give us a what? 3:1 risk reward. That means we're making 3 times of our money. Now let us place a trade. Now we've placed our sell trade, and we can wait for the market to play out. See what the market has to offer. That's it. Market hit our what? Hit our take profit with no time, right? Just by us identifying our what? Double top and a neckline that has been broken. So if which is right there, neckline has been broken, a double top has been formed, which stands for a high chance of reversal. So the first market is very very easy. What you have to do, you just have to know the do's and the don'ts, what you have to look at for and what you don't have to look at for. So now that we've our this is the second trade we'll be taking, which it's take profit. We'll go down to the 4 hour time frame again. Right, so a double bottom is also created as you can see on the 4 hour. That is if the market go back up, right? Okay, now this is double bottom. So double bottom have a very high chance of reversing. So these are another double bottom right here. But like I said, we are only looking for a what? A set of opportunity. Right, so this is the bottom, which means market is gonna reverse. So market will reverse up to this point, and let's locate our fair value gap. So there's a fair value gap right here. Which I think market has what? Mitigated already. So we can enter a sell position as of this aspect. Why? Because market has mitigated our what fair value gap, and the overall movement of the market is down. Is what is down. The market is moving down. But the drawback of this is on the daily time frame, we see a double bottom that has been created, which stands for a high chance of reversal. So we might not want to enter this trade because of what we see right here, a double bottom on the daily time frame, which is very very strong. So what we're gonna do is we're going to be patient for the market to play out. So if we are to enter a sell position right here, we might hit stop loss and we might hit take profit. But we don't want to be gambling. We want to enter a trade that is very 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 sure for us. So as you can see, so if we have entered, we'll have written our what stop loss, because the daily was creating a what a double bottom, and it's going to be very very strong. So but I guess we have to reach point, a certain point, then try to come back down. And like I said, the only zone we will be interested in is this zone right here. So market has potential of coming to the zone. So any trade you want to be entering is going to be a set trade. So now market has broken this pullback on the daily time frame. That means the market is what is coming downward. It's going to be a downtrend. So what we're going to do now is we can enter immediately, but it's going to have a high risk, right? Because we'll have to put our stop loss right there, and market might hit our stop loss. But it's a game of chance. Right? It's a game of chance. Then we can now decide to put our take profit in this zone, giving us a 4:2. That means we'll be making 4 times of the money we are risking. Right? So let's play the market to see. Let's go back to the 1 hour time frame for a confirmation, which is a change of character or a valid break of structure. And this is it right here. Market breaks below this zone, and market can reverse up to this zone. Market can decide to reverse up to this zone, feel the fair value gap and continue downward. Right? But what the market is not allowed to do is to come and grab liquidity right here. Because if the market does that, we are going to be tapped out of the market, right? So let's wait for the breakdown. You see, said, market comes to grab the liquidity, the fair value gap, the imbalance that is right here, and might decide to continue downward. Our stop loss has been heated. Alright, no, so now on this trade now, like after we've hit a stop loss, then markets decide to start coming downward and broke this fair value gap, which wasn't respected. So what we're gonna do now is we're gonna wait for the market to come back to this fair value gap right here. Then we're gonna go for a short. Then I'll take profits. Stop loss will be around this zone right here. Now take profit is going to be our next point of interest, which is going to be a long way down. Move to this zone. Yeah, I could choose the last. So if you have so many fair value gaps, always pick the one that is. Always pick the last, because the last are usually strong, right? So what we're gonna do now, we're gonna wait for the market to what? To enter that zone right there, yeah. So you're already in the zone. And I think we're set to go. So let's see how the market plays out. That's a straight bullet to our TP there. Alright, so that is all for this video. Next video, I'm going to talk more about the other block.